This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Hello and welcome to this Fireside chat on battery metals. Now, of course, the battery was invented by Italian scientist Alessandro Volta, and it's essentially something that stores chemical energy and converts it to electricity through a chemical reaction between the two key parts, or electrodes, of the battery. The anode, which is the negative electrode, and the cathode being the positive electrode. Both these electrodes are separate from each other and immersed in what's called an electrolyte, which stimulates the reaction. Now, these three elements of the battery are made up of different types of metals or chemical compounds, and depending on the type of battery and its use, each will have a different blend or mix of materials. And today we're going to focus on three key materials used predominantly in electric vehicle batteries. That's graphite, manganese, and lithium. And we'll be focusing on the fundamental factors driving demand for these materials as the lowly battery begins to take center stage in the green economy, from energy storage for national power grids to the whole electric vehicle revolution. So here to discuss today are three gentlemen working in the exploration and mining of these commodities. We've got Robin Birchall, the CEO of Giyani Metals, listed on the TSX. They're advancing their projects in Botswana. Hi, Robin, how are you?
Good morning, good afternoon, depending on which time zone you're in.
Indeed, lots of different time zones we're working with here. Charles Fitzroy, who is the CEO of Braddahead Lithium, listed in London, and they are identifying and developing lithium projects in the USA. Hello, Charles, welcome.
Hi, Mark.
And finally, Brent Nicolation, the Executive Vice President of Next Source Minerals, listed on Toronto, who are commissioning their Molo Graphite project in Madagascar next year. So, hello and welcome to all of you. Charles, let's come straight to you first on lithium, if I can, because many people, I think, are familiar with lithium batteries. It is in the name, after all. But also investors are very familiar, as back in around 2016-17, lithium stocks were very popular, driven, I would say, by the initial hype around EVs. The price had a very strong run and then fell about 80% before effectively V-bottoming out at the end of 2020 to all-time highs. So can I ask you first, what is your take on the extreme swings in lithium prices over the last 5 years and the recent explode to new highs in less than a year?
Yeah, Mark, I understand the question regarding lithium spikes, but I think it's really been one spike. And right now we're entering into a period of pretty solid demand going forwards. The carbonate and hydroxide prices did spike twice, and then sort of last finishing dropping off into 2019 where the prices dropped off. And then last year we saw bottom prices. I think carbonate and hydroxide were down sort of $4,000 a ton. Spodumene was $250 a ton. And then this year we've had some fantastic rebounds up to more, prices in line with the demand and the supply at the moment. Spodumene's up at sort of between $1,000 and $1,200 a ton spot. And there is such a difference, I think, between now and what happened back in 2017, 2018, when there was a lot of excitement, as you said. Everyone was getting very excited about electric vehicles. And this demand just wasn't there. And the prices skyrocketed and there wasn't there anything to keep them there. And now we see from analyst models, which last year had been worked on to understand how prices are going to continue forwards. Now we are in a situation where the demand is there and the EV penetration is increasing. And it's perceived that the prices are going to maintain this level for some time and then tail off to long-term forecasts are very different. But it's sort of consensus view that they're going to maintain above $12,000 a ton for lithium carbonate, which is a very solid price for most projects right now going into development and also ones that are being worked on currently. So it is a very exciting time to be part of lithium. And I think we are in a situation where the spikes are no more and we're going to be consistent sort of demand going forwards.
Okay. Well, let's look at manganese then, Robin, and perhaps an underrated commodity deserving of a bit more love. Maybe what can you tell us about manganese?
Well, yeah, I just wanted to maybe follow on from Charlie. If you look at our underlying commodity, which is not the easiest to find, you can see that the we've got what we in Canada call a classic hockey stick graph. It's been sort of bubbling along flat for 3 or 4 years, and then past year, it is it's just pretty much vertical, up from about $800 a ton for MSM to now it's almost $1,600 all-time high, with no particular doesn't seem to be a block in the pricing going higher. Especially when you see the kind of the proxy price, which is the metal, is at all-time highs ever. It's almost it's $7,000 a ton at the moment, the metal. And that's a function of both demand in the steel market and demand coming out of real demand coming out of the EV or the OEM market and the battery market. And I think I agree with Charlie, and I'm sure that Brent will probably say something similar on the graphite. Graphite is like mine. It's a little bit opaque, the pricing, and the spec is very our spec is very strict and specific. It's 16 elements you have to meet the spec on. So yeah, I mean, look, it's finally coming out from behind the curtain or something, some such metaphor for our metal as well.
Okay. Well, yes, let's come on to Brent and graphite. And I think investors can sometimes forget it's the largest component in a lithium-ion battery. But, it has a strong demand for growth as well. The prices have been a bit more stable historically, I think, but can you give us some background, Brent?
Yeah, so graphite, I mean, you're right. It's often the forgotten side of the battery there. But again, it's the largest component of the battery. It actually has the largest demand exponential growth of all the battery materials, which, by the way, are all going to grow significantly. But graphite actually has a very strong foundation in steelmaking. So 2/3 of the world's graphite right now is consumed in steelmaking. And that smaller portion was always the battery side, and that's now going to explode and overtake the traditional consumption for graphite in the next 5 to 6 years, all traced to do with the electric vehicle and its use in the battery. So the reason why it's doing okay and the pricing has been somewhat stable is graphite has got a very strong traditional usage, and the great news for investors is that pie is growing. So it is essential in steelmaking, has been for a century, and now it is that large component of the lithium-ion battery, and we're now having a vehicle revolution. So we're going to see somewhere between a 5 to 10-fold increase in the amount of graphite that's going to have to be mined and I guess supplied to this new market called electric vehicles. And that's exciting for all of us. So I mean, the graphite's got a very strong future. It's about time that it's been kind of brought out of the shadows. And again, everybody talks about the cathodes, and that's very important, but people don't realize no matter what the cathode is in the battery, whatever the chemistry mix is, whether there's cobalt or not cobalt in your battery, you have to have graphite and lots of it.
Yeah, Brent, I got a question for you, actually, if you don't mind, Mark, because we see this in our market a little bit. I wanted to just get a feel from you because, obviously our market is quite steel heavy as well. But, the margin in steel is pretty low. And I wonder about, the bidding up of the price because the component, I mean, I'm not so clear on the graphite side, but on our side, we're in about 2% of the 2 to 4% of the cost of the battery pack is manganese. And there's literally zero price sensitivity, compared with steel. And as we draw units out, like this is the debate that's happening with the pricing, is as we draw units out of the steel market, which is fairly well in balance. I only see up in our pricing because the battery side can bid more. They just I spoke to, I won't say the name of it, but a very, very large, the most important cathode manufacturer in the world, at least outside of China. And I asked him, what happens if the price of the metal goes to $6,000 a ton? And he said, well, I don't care. I just pass the price directly on to the end consumers because they don't notice the difference. It's only a few dollars here or there. Well, and this was 3 years ago when I mentioned, it's like 2018. And what I said to him, I actually used a price that I thought was a fantasy price. I'll never see this in my lifetime. We're $1,000 above that right now. in the metal market for my side. And my question is, what do you see happening on your side? Can the graphite side of the battery pay more and just suck it out of the steel market and just pay more and drive this price a lot higher?
Yeah, I mean, graphite's got a little bit of a different story. I mean, first of all, very much similar to you, it's about 6% of the battery cost is the graphite, but there's about 250 pounds of graphite per car, and that's just the natural side. There's actually about 500 pounds of graphite per electric vehicle, and the other half of that is synthetic graphite. So there's always a competition with synthetic, but both are required in that battery, and there's reasons we can talk about later. But with graphite, actually, the steel market uses a large and jumbo flake graphite, and it's actually has to be a relatively high purity. You get a very good price for that. You get somewhere $1,000 to $2,000 a ton for your flake. Battery, the feedstock that goes into that is actually the small and medium flake, and that is a much lower price. So that's about $800 a ton. It can be as low as $600 depending on the source from China. And right now, China controls 100% of the value add to get it there. So people probably don't realize that graphite has to undergo 3 critical steps to go to a battery. And the feedstock is actually quite cheap to get, but then you have to take that product, you have to do 3 things to it: spherinize it, purify it, and then coat it. And each of those steps has a cost. But once you have those steps involved, you can take your product that sells for, let's say, $800 feedstock. If you purify it and spherinize it, you can sell it for $3,000 a ton. If you coat it, it's roughly $6,000 to $7,000 a ton. So that's where your margins are. And to answer your question directly, it's wonderful to have a product that has 2 very strong demand channels. And the fact that the steel market goes for roughly $1,000 and the battery market goes $800, but if you process it up, you can get double the margins each time. That's very interesting. And that's what's driving a lot of the projects, good and bad, that are saying, forget the steel market, I'm going to focus 100% on the battery market. And yet there is lots of hurdles, technical hurdles to overcome. Your product actually has to be verified. It takes 2 to 3 years to even get your product verified for the electric vehicle supply chains. And many investors don't realize the cost, the time, and the validation period that's required for you to do that. Yeah, and I'm sure lithium and manganese are exactly the same. I mean, you guys, if you're going to go and sell it to a OEM, meaning a car manufacturer, you have to get your product verified in extremely large quantities. And it's an R&D experiment if you don't partner yourself with the right people. And there's a reason why the Panasonics, the Samsungs, the Hitachi Chemicals, the Showa in the world are the ones that process these materials and sell them to the OEMs. It's not the graphite companies or the manganese or the lithium yet. Not that we can't, but we have to be partnered with the right people in order to do that.
Yeah, and you were asking before the call, as we've just raised some capital, one of the key things that our expenditures from, we filed our preliminary yesterday, is the demonstration plant, and that is a part of the process. And we have a very large OEM partner. I can't obviously say the name of who that is, who we're working with, and they want samples right now as soon as we can make that. So yeah, I agree with you entirely. And a lot of projects don't like they think that just having the raw resource in the ground is the end game. It's not. We're almost chemical processing companies as well. For us, the resource is really not that incredibly important. We have a very good high grade resource relatively, but it's actually all the downstream stuff that's really important, which gives us a huge margin.
Yeah, well, I agree. For us, we were a bit earlier stage than you guys, but for our brines and our clay projects, metallurgical testing is the key thing to be able to do that. But that's why we got very excited recently, because we have some pegmatite projects, and the beauty of that is we would be reducing a 6% spodumene concentrate, which would be processed by a third party somewhere else. So that would sort of separate us from that side of things, because they've produced the spec for the end user. I think Tesla have a spodumene conversion facility they're setting up in Texas. But for our other projects, we'd have to be down the same route as you guys and have that long lead time to be able to develop it with a good partnership with an end OEM user.
Partners, then, would you all agree that the partnership's a real key point here for all of you? I mean, I hear it quite a lot talking to mining companies that car manufacturers are looking to partner directly with mining companies, even if they're at early stage, to secure their supply chains. Do you think that's really key? Brent, I'll ask you first.
It is. I mean, what these car companies clearly want to do is eliminate middlemen. I mean, right now there's in graphite, there's probably anywhere between 2 to 5 middlemen from the fact you can go and acquire graphite out of the ground and then get it as a finished coated spherical purified graphite. That's the form of graphite that the car companies want to buy. Right now, they're buying it from very large companies in Japan, Korea, China, for example. So what these car companies want to do is go direct and find where the sources are. Here's the problem, that's a massive learning curve. An OEM is used to buying car seats, not going and selecting the leather from the farm and the cows, et cetera. And that's the analogy I use, is they're going right into the weeds now and they're saying, okay, what goes with what? What cathode mix should we have? What's the graphite? It's very complicated. And they don't realize that all these companies are going to say, yeah, I can supply you, when most of them don't know how to supply them, or they don't have the technical capabilities, because coating and spheronizing are extremely technical. There's a reason why these big companies do them. And that's why we quickly figured out we don't know what we don't know. So let's go partner with people who do know. And that's why our latest news, and we're going to be in production next year, but we're fast tracking our battery anode facility. Our partnership is with the Tesla supply chain. The people who actually supply coated spherical purified graphite to Tesla, Honda, Toyota, Nissan are our partners. So we have acquired that IP to produce battery grade graphite, and we're going to pay a total of 5% for that privilege. But we've aligned ourselves with guys who already have established and proven technology. So that's how we've separated ourselves from the other graphite players, because it is an R&D experiment. It requires millions of dollars and years of verification, and we skip all that. We have spent the money, and Robin made a good point about the pilot plants that are required. There's this whole misnomer that you put 500 grams or 2 kilos, send it to a car company, they say great, and they sign you up for an offtake. That can't be further from the truth. You have to produce tons of material, and that material then has to be processed, upgraded, tested, verified, put into a vehicle, driven around, make sure it's stable. That costs millions of dollars, and it takes 5 to 6 years. And NextSource has done that, and many companies have not. And obviously, Charlie and Robin here have got a pathway to do all that. So these guys are doing the right things right. We've done that, but we had to learn how to do that. And you have to go and do your research. So that's a watch out for investors and anybody listening to this call. Be very wary that every company will say, yes, I can do this. I'll supply a car company. But then when pedal hits the metal, what do you do when they say, okay, show us what you can do and how you do it?
Yeah, that's right. And I agree with Brent. So we had buried in our announcement a couple of announcements ago, but it's a very important but small line about our OEM supply agreement that we signed. And just entering that supply chain process is incredibly hard. And just to step backwards a little bit and make a small comment, about the going down the chain. The car companies, what we've seen is they've gone from having absolutely no mining people whatsoever on calls to 6 to 9 months later having hired a bunch of mining engineers or geologists to fully understand what we actually do and to get better at understanding the process. It's a big learning process for them. It's I quite like your analogy there, Brent. We being in that process, we're a few steps behind you, but far ahead of most of the rest of the manganese curve. That's for sure.
Yeah, and from the lithium side of things, sorry, Mark. I think you're right with the OEMs want to set a specific chemical to be supplied for them. And we're seeing a lot of sort of consolidation in M&A in the lithium space. It makes sense for bigger companies to buy up a lot of the smaller guys now. And so they are supplying to the end users themselves, which I'm sure the OEMs will like, because then you get a certain grade and they know what they're getting. And you get sort of 20 different providers in the US. You're going to have to vet each one to get each one to certain specs. So I think that's something in the lithium industry we're going to see a lot more of, a lot more M&A and a lot more consolidation.
Okay. And Robin, the demonstration plant that you mentioned earlier, then, is that to effectively demonstrate to OEMs what you can do? Is that the purpose of that?
Yeah, it's exactly as Brent mentioned it. So we will be producing about 250 kilograms, so a quarter of a ton a day. And we will send it out for free to the supply chain that we're in contact with, which is it varies as well. The supply chain is, I don't want to say fragmented, but you might send it directly to Panasonic in our case, or you might send it to somebody who's a cathode manufacturer like Umicore, or I mean, I know JMAT has just exited the business, but JMAT or somebody like that. But all of it has to be qualified by Renault or Ford or Stellantis at the top, and they need to know, because one thing we haven't mentioned, which is unbelievably important, is your carbon footprint. That's one of the most important things that alongside spec is carbon footprint, and the third one is China, right? And China and carbon footprint kind of go together, as we've seen in COP26, as they try to water down the getting rid of coal because all their power is coal fired. But we can't deliver to those guys unless we've met the qualifications of the OEM. So as you go down the chain.
Yeah. Okay. It's a very sort of novel way of running a mining company, I suppose. And Brent, you've obviously gone down that route with your company. Was it really hard? And I mean, do you have any advice to the other two guys who are perhaps not quite at that stage yet, but working towards that?
Yeah, I mean, so when we found our graphite, we didn't go out and tell the world we had graphite. What we did is we jumped on a plane, spent a year and a half traveling. I met with the top buyers of graphite and processors around the world. We focused on two markets, Japan, because that's where the battery mecca is for upgrading your graphite, and they're the ones that sell it and produce it into the cars. And the Japanese market uses a very, very high end coating process for graphite. So about 40% of the electric vehicles worldwide that are driving on the roads use Japanese technology in that battery in terms of the upgrading. Europe was the other one. So what we did, and as Robin mentioned, we did a pilot plant about 6 years ago, did 200 tons of ore, generated 13 tons of concentrate, and then we focused on those two markets. We sent them to battery manufacturers and processors and sent them to the steel world. So we signed up as our offtake partner, ThyssenKrupp, so the big German trading commodities steel company, so one of the biggest in the world and the biggest graphite trader in the world. And then our other side of it was the anode processors, the top anode processor in Japan. And that was a 6-year process. So the time that we actually introduced ourselves, and they already verified we have a good project, we have a high quality asset, but now show us you can actually make this material and it can go into a battery. And that process for us to get the offtake, the verification using run-of-mill material, meaning you have to take lots of material from the deposit and process it. They don't want to see pounds, they want to see tons. And that's a very expensive and time-consuming project. And by the way, you don't get it right the first time. And that's the emphasis I need to, I guess the advice I have to my fellow colleagues, and would be more on the graphite side, is do your homework, figure out what these guys want, and then you'll find out very quickly that we don't have that expertise. We know how to get the graphite out of the ground and make a beautiful flake concentrate, but then to actually value add it into that finished form that goes in a battery, there's a reason why these major companies have the IP, the intellectual property to say, yeah, this is how we upgrade it. So that's what we discovered very quickly, is that's not easy to do. That would cost millions of dollars and years of development, and we don't have time to do that. So we partnered with the individuals that are in that supply chain, currently supplying material to very well-known OEMs. Tesla's supply chain is Tesla's one of them. So one of our offtakes is going to the Tesla supply chain. So that relationship, we developed that took another 2 years. And that's why we have the partnership we do, where we're building a battery anode facility together with these partners, and we're using their IP as our partners. So we don't have to worry about how to do it. We just have to figure out where we're putting the plant, and we're doing it together.
But where are you going to build that plant?
It's either going to be 3 jurisdictions. It's either going to be in Europe, North America, or UK. And I guess South Africa is one of the options as well. So it'll be four jurisdictions. It all comes down to operating cost. It comes down to the fact that it has to be a non-Chinese source. So the supply chain doesn't, we're going to be one of those. And again, these guys, Charles and Robin, both know it's very important not to have a Chinese supply chain link to yours. That's what these OEMs are saying, guys. We do not want to source either the feedstock or the value add. In my case, it all comes from China. The value adding is 100% of the battery grade graphites processed in China for a reason. It's cheap. And, the fact they don't use it as very effective and the environmental standards are questionable. So from my standpoint, it's important, and the OEMs have, all of us have heard this, but every OEM has said, it's very important your product does not come from China.
Yeah.
So do you think that those guys, so again, this is a question that we face. Do you think that there's a true premium between Chinese and non-Chinese product? Because we keep getting told there is by one side, and then we get told by the financiers that no, you can't assume any. I can see in my market.
It is a classic. I want the cake and eat it too. So we know right now they'll pay a little bit. 5 to 10% is probably the max. First and foremost, it's price. Second is your environmental footprint. And you can argue that some of them will say, no, that ranks number one, but every single one of them will tell you what's your price. And then they talk about, okay, how's it processed? So we know right now in our discussions, even if you are environmentally sound, but you're double the price, you will not get the business. You have to be within a certain delta. And I believe that delta, for me personally, I think it's a 5 to 10% premium is what they'll be prepared to pay, but it's going to be an education. And I welcome you guys to comment on that, but the conversations that I hope every single one of us is having with the OEMs is, guys, you want to have a non-Chinese source. It has to be green, etc. Are you willing to pay for that delta? Because right now they're paying incredibly low prices versus what it costs to really do things
properly,
I guess, properly. But just wait until China realizes that some of this competition is taking away their manufacturing, et cetera, and they're going to do what they normally do. And that is either start to discount the pricing heavily and eliminate competition. So are we all prepared to do that? You have to have projects that compete right out of the gate with China. And many of them don't out there. And you guys, I'm sure your competition is mixed between low cost producers and high cost producers. If you're high cost, you're not going to make it. So yeah, answer your question, Robin, price still is number one in their minds, and a very close second is the ESG aspect.
Yeah, we can see that as well. We were talking with the guys just recently, and they're very, very stum or whatever it is on pricing. But we can see there is in our market there's a definite differential. If it's $1,600 in China, there's only a few manufacturers that they can reliably buy from in the West, and those guys are getting a large premium, $2,000 to $2,500, which is way above the 10% that you're thinking about. But that's because they're an incumbent.
I'm talking sustainable. I'm talking long term.
Yeah.
Within 5 years, everybody right now is paying X price for a ton of lithium, manganese, and graphite. But at 5 years from now, I can tell you that when these things become, the penetration rates for electric vehicles are much different than they are today. Prices will come down. So what is that price that they want to pay day in, day out 5 years from now? And the things I find exciting is the volumes are massive. One car company alone, one line right now would be about 10% of the world's graphite consumption. Yeah. One OEM, one car line. And that's a 5 to 10 year demand for their growth. But again, these things aren't niche anymore. And you're seeing the penetration rates. We're all used to this 2 or 3% penetration rates for electric vehicles. What happens when you get above 10%? We all know that when you hit 10%, that's when commoditization comes in. That's when prices start to go down, et cetera. You get these, penetration rates will go up. What if you hit 30 or 40%? And this is why we're seeing, for all of us, these massive demand curves. Graphite is going to go up from 180,000 tons a year for battery, projected to 4 million, up to 7 million in the next 10 years. 7 million. That is a quadrupling times 3 of our market. So you're going to need to see more lithium projects, more manganese projects, and you're going to see more graphite projects come online. And the OEMs are, quite frankly, nervous. They're scared. Everything to them is security of supply. Where do we find this? How do we get this material? And the chip shortage right now is showing them what happens. Imagine you're building a battery and you need 5 of these raw materials that go into a battery. All 3 of us are part of that, and they can't get one of us.
Yeah.
The battery can't be made. So that's a major problem. And it's just like right now, a car, you can't build a car without a chip. So, it brings everything to a crawl. That's what makes them extremely nervous. And they're going to have to pay upfront a little bit more in order to secure that supply, but that's not sustainable. I think we all have to make sure our projects are there.
It brings me to the point that was the most, we did a chat like this a little while ago, Brent. It brings me to the point that that we were talking about in that, which is what's happening in M&A. And there's no question that it started to pick up. I mean, it started in the lithium space. And, I don't know how long, I mean, you guys have a very good shareholder there who probably has greater plans for the battery market. We have some pretty good shareholders, but I can see the OEMs or somewhere down in the chain looking at it and exactly as you say with the chips going, Jesus, if I'm gonna have to warn our profits here if I can't, if I'm short 15% of batteries, that's 15% cars that don't go out the door. That's my margin gone. And I can see them starting to look. They haven't quite got to you and my part of the market yet, but it's coming very soon. Well, they'll say, you know what? The 120,000 tons of manganese sulfate that Giyani can make, I never have to worry about manganese ever again for my batteries for like 20 years now. And, that's a function of we've grown our resource, but whatever. They can do that. And I see those guys starting to come and have a look around. And shareholders need to be ready to demand the right price here. We are not trading, I've seen your guys' share price, we're not trading it at strong PNAVs at all. And I've quite frankly, I think we're probably undervalued. But once those guys start to come, they should be not willing to sell our companies for too cheap because it's mostly the shareholders who will decide.
Mm-hmm. And do you think that security of supply then is the most important thing for the OEMs rather than the source? I mean, there's a lot of talk about kind of homegrown, particularly in the United States, having a homegrown source of the supply. Do you think it's more, though, literally about where can we secure our supply?
Absolutely. And I've had this conversation. I say, how important is it that these things are next door to their plants? It's pretty important. But right now, number one, your asset has to work. So it has to be a quality asset. So they wouldn't be talking to any of us if we didn't have quality assets. Number two is where are you in the stage of development? So are you within a near-term producer? And then is your product, has it been de-risked and verified, the metallurgy, et cetera? Can you actually do it for the cost that we need to buy it for? So that's the three things. And you usually fail very quickly on one of those. So all of us have great projects. They're high quality, they work. Now you have to go and say, okay, where are they? And where are you in the development stage? Well, Next Source will be opening up and commissioning next year. Our battery anode facility will be roughly 9 months behind that. So that's attracted a lot of attention. What separates us from the whole thing is we actually know how to process the graphite to go into the battery. And we've demonstrated and proved that. And our partners are tier 1, tier 2 in terms of the Japanese OEMs and the Tesla supply chain. So that's what we've done to do that. But the security supply, absolutely. The first two things they want to see is, okay, just make sure your plant's up and running. It's not Chinese sourcing material. That's number one. And then the second or third or fourth plant that ends up they're looking at will probably have to be localized. So all of us, and this is a great opportunity, but as they start building out plants, et cetera, would they prefer to have a graphite, manganese, and lithium project they can source within, a rail line away from them? Of course. Problem is Mother Nature didn't set the world up that way. And all the quality projects are sometimes where they are because they're there from a geological reason. So we're in Madagascar. Doesn't mean that that's where the material has to come from all the time because we'll build our plants, but our deposit works and it has advantages for being there. And there's disadvantages of it being there. And that's distance and to certain markets, but we can fix that.
Okay.
Yeah, it's pretty much the same for us, I would say. And that, as I mentioned earlier, the whole point of this additional capital is to maintain that pace. We're a little bit behind you, but not hugely. Like we're almost ready to award the contract for the demonstration plant. That's it's a multi-month build, not a huge long period to build it. And as we go forward on that, we can catch up a little bit in this phase. But if you look, the graphite market is better developed than the manganese market. There's nobody else who's really, other than Manganese, who's at the same kind of stages. Everybody else is far, far, far behind. And there's this, there was this wishful thinking from the market that, like the guys who blow up rock somewhere in Australia, well, they'll supply that. Somehow they'll just magically make this end product that we need. And then they're waking up to the fact that just doesn't happen. The only people who can do that is the Chinese, and they don't really want to buy from them. They're not sure about the environmental standards, and they're not even sure if that reserve capacity really, really is there anyway. And they're starting to panic a little bit. And nickel was a bit ahead of us, and I know some guys in the nickel business. They face the same thing, and the understanding was like, well, the thought was like more than a year ago is, oh, Norilsk will just send us some. Norilsk only makes 8,000 tons of the sulfate. It's nothing. It's like a drop in the bucket. It's an accidental byproduct. And it was just assumed that because they were the biggest individual supplier at the time, that they would just be able to like massively increase with no plans to do so and no capital allocated. And then, the larger OEMs woke up to this fact, and you've seen these investments by BASF and into, the smelter in Finland and cobalt and nickel, and they're coming now for our areas for sure. And they're way more awake to that fact. And that's why we have companies that have 300,000 people talking to us where we only have whatever it is, 25 or something like that. We may be small, but we're absolutely going to be vital and key for them to actually make the vehicles they want to make.
Well, it's good to hear that you guys are doing right things right. I mean, demonstration plants have to be done. That's what we're avoiding because the partners we have, we're actually getting a turnkey facility. We're actually getting the exact facility that processes right now for Tesla provided to us as part of our partnership. So we don't have to do a demonstration plant. We're going to go right into production, and it just needs to be built. But right now we're determining where is that plant going to be built. And we need input from the OEMs that we're in discussion with right now as to where that jurisdiction should be, depending on the customer and depending on the requirements of that particular OEM. Again, we have to actually tweak our graphite depending on what the cathode is. So one of the things I didn't realize until about a year ago is that whatever goes on the cathode side, the chemistries are complicated, and the team that we have can adjust our graphite to whatever the cathode ends up being. So if it's a LFO or if it's a cobalt heavy battery, then the graphite that we have goes into all of those, but just what percentages, and there's certain mixes, etc. we have to be aware of. So all that expertise out of my pay grade, but these are the reason why we partnered with the people we do, so that this stuff comes as part of our partnership with those OEM supply chains that are downstream.
We're very much aware of, obviously we're much early stage in both you guys, but we're drilling as we speak. We're getting resources proven up, and metallurgical testing is one of the things we start as soon as possible, because that's vital for our projects to be able to develop prove up that the lithium can be processed to a battery grade quality lithium product. And that's the key thing we're doing at our Arizona project right now. Because obviously we're not in Africa, but we're in the US. We have our own troubles as well. We have our own battles to go against. But being located there for us is a benefit for the end users. The US is going to need dramatically huge amount more of lithium than it currently needs. I think it's forecasted sort of 350,000 tons by 2030, and it produces only 5,000 tons right now of LCE content. So there's a huge gap there for the US, and there's definitely a lot of discussions regarding the US and resource nationalism. Well, not nationalism, but developing US supply chain of lithium is something on a lot of people's agenda right now. So that's something we're looking into. And obviously, we're earlier stage than you, but it's part of our discussion with the groups we speak to over there.
I think it's been fascinating what I've heard. I mean, it's completely opened my eyes to the whole issue that perhaps that is facing the OEMs here, not just on the whole supply demand side of it, but of course that the whole process is far more involved, from actually sourcing it, and what you guys are doing with your project. It's such an involved process. I think it'd be very important for investors to do their research and look at what companies are taking it seriously, and go for those ones rather than the ones who potentially won't be able to actually make it happen for real. And talking about sort of waking up and the market waking up to this, I suppose it's you would probably almost go without saying, you probably all agree that prices then the future's looking bright, and almost maybe now at the moment is a new kind of base level for prices to rise, of course, not just with EV, but with potentially batteries, I suppose, for power storage, that kind of thing. Would you agree with that, first of all? Charles, what do you think?
Yeah, well, lithium prices have gone up dramatically recently, but this is sort of part of the new demand going forwards. I think they're going to soften off, over the next few years, but at the moment, They're going to maintain for the next 12 to 18 months, but after that it might soften a bit. But longer term forecasts are still very healthy. Upwards of $12,000 a ton. We're upwards of we're up at the moment. We're sort of upwards of $25,000 a ton, even greater than that. Depending on where you're negotiating it. But we're in a very healthy place for lithium, and very, very, as you said, very bright outlet for most projects being developed right now.
Do you think that the equity markets have any idea about what's perhaps to come, or how potentially short the industrial market is?
I think they're really understanding it. We've noticed we're listed in the London market, and I think a lot of companies listed London lithium based haven't had the same share price appreciation as ones listed in Canada or Australia, where they've had some phenomenal share price rises. I think American Lithium, the company which we compare some of our assets to, their share price has gone up over 1,000% in the last year. Liontown Resources, who have a similar, spodumene project we compare our asset to, they've gone up over 4,000% in the last 2 years. So there's been some phenomenal rises in share prices, and I think people are really understanding at the moment that the lithium prices have gone up and they're going to stay that for some time. I think that is something we're seeing. Hopefully, the London market will catch up on that too.
Okay. Do you think that there will at some point be an inflection point, do you think, or will it be a gradual?
Well, maybe if I could just say a few words, Mark, here on this, because we discussed this previously with Brent. Look, I think that we were talking about, this is maybe back in May, it was a calm before the storm, and now we're into November here. Yes, absolutely. There's a bit of wheat and chaff here. Like, one of the other companies that we were on the call with, their share prices rallied very strongly, but they are well advanced, large cap company, and they probably more than doubled in value. And they benefit, their quality company. But I think that as we look at some of our kind of metals and this slightly smaller companies, I think the wheat from the chaff selection is still going on. We have had a bump up, and I don't know, Brent, if you've had a little bit of a bump up from the summer, but I still think that they haven't quite figured out the fundamentals, like what you were talking about, who's actually doing the real work and who isn't, and who's actually going to make it, because there's a number of factors there to you have to meet in order to be successful. And I certainly see it. Like, I see some of Brent's competitors in the graphite space, and not to use a bad word on the call here, but they're absolutely crap. They have no idea what they're getting themselves into. They have no idea how technically complicated it is to make the right kind of graphite, and the millions of dollars in the time. And we also see that to a lesser extent in our part of the industry in manganese. There's some people out there who I just really think they're not serious. They're mining the market. They're not actually going to build a project, build a demonstration plant, and get there. And that does irritate me that we don't get valued for the seriousness of the work that we're doing and the effort and the capital that we're putting in to get this. We all agree we all have good projects, but moving them to the next steps. And I think you'll see, as we all know from the markets, it happens very quickly. And if my share price, and I know we're trading because of the financing right now, but if my share price all of a sudden is over $1 a share and towards the target, it'll happen in probably 6 weeks time, as people are like, these guys they're going to make it. They're going to be one of the producers going forwards, and we've got to start to value them like that, as opposed to valuing them we're not sure if they're going to make it.
Yeah, Robin, you called, some of your comments are bang on. So, last year I counted 120 graphite projects out there promoting their projects. And yet of those, there's probably 12 with actual technical studies that you could look at to say, okay, are they economical? Can they sell to the current market, not the one that's going to be 5 years away? And where are they in the entire cost curve? And I can say with great confidence, there's a tremendous amount of misinformation, hyperbole out there surrounding at least my graphite project. I haven't followed the lithium and the manganese, but I'm sure it's quite similar. But there's lots of misinformation out there that unfortunately is being digested by investors. It's being passed around. And many of these companies don't even realize what they're putting out there and promoting is inaccurate or just blatantly wrong. So these are things that, again, we have to do. But again, NextSource, we've learned, we're experts in the graphite space. We know exactly what we had to do, and what we did has proven with the projects and the partners that we have. Yeah, we're doing the right things right. So at the end of the day, in terms of where graphite is going, yeah, the prices have risen. They're going up. But again, what we're looking at is where are we going to be in 5 years when our mine is open? We're actually supplying material, hopefully to OEMs that we all of us hope to have signed up. All of them are extremely nervous about where is this product coming from and what is the price going to be. So in the next 2 or 3 years, it's going to go up. The demand, I mean, investors would be so excited to hear the nervousness and the concern that the OEMs have about where they're going to find all these materials that go into battery. And that's real. You can't put that in a press release, but the conversations we're all having is, guys, we need to secure this product. So number one. Number two is, what price can we get it at? They know prices are going up. And then the third conversation that we all have behind the scenes is, okay, if we're going to win these contracts and get these big OEM customers, you have to be able to say, okay, this is where the price is going to be in the next 5 or 10 years, because you always have, at least for me, that elephant in the room. It's called Chinese processing and graphite. And 60% of the world's graphite sits in China in terms of in the ground, and 100% of the battery grade processing is currently in China. That will change. And I mean, all of our projects will have to come online. You're going to see many projects will need to come online to meet this demand. It is going to be exciting in the next 3 to 10 years, what's going to happen with electrification. And Mark, you brought up, the fact that this is energy storage, large scale energy storage. I mean, all our materials are used in large scale batteries to, do load leveling and peak shaving and just to do, battery backups for corporations, industries, etc. I mean, the amount of graphite in a car is nothing compared to what you would see in these larger batteries that are going to be used for grid storage. And same with lithium and same with manganese. It's exciting. And we all talk about the car because it's the Halo brand. Everybody drives one, you can see it. But what you don't see out there is this massive shift to energy storage and how to capture that. And that's exciting.
Mm-hmm. I totally agree with that.
Yeah. And just what do you think of I don't know if it's a concept. I mean, it certainly wasn't a concept, but the whole sort of idea of a mining super cycle, I've heard a few people say it's overdue. What's your opinion on that? Do you think it might be driven by demand for your particular commodities that you've got, or would you see a super cycle in battery metals commodities?
Well, I look, we Brent and I and Charlie all lived through the super cycle. That's different. That was China industrializing itself from, you got to remember back to 1989, like their economy was tiny back then, and they massively increased. They built more roads and rail than Western Europe has, period, in like the last 20 years. That's a super cycle. This is different. We're in the battery metal space. The best person, if you want to listen to somebody kind of hyperbolize about that, is Robert Friedland. It's just that our metals, which are relatively small tonnages compared to some of these other much larger tonnages metals, are going to be like, you can't make the batteries without them, and that's gonna if you want to call it a super cycle, but it's gonna sustain demand for a longer period of time, and it's a major shift in the way that we consume energy, and pass it around and store it up, and I don't know if you want to call it a super cycle, but we're definitely, all three of our metals plus about 4 or 5 other ones are all, you absolutely need massive increases in the amounts of them. I mean, I know Brent is talking about his numbers. We're about, we get asked what's the consumption for batteries at the moment. I don't know. I guess it's about 100,000 tons now, up from probably 33 years ago. And it's going to, if I looked at some numbers for nickel sulfate. Well, if those numbers for nickel sulfate are right, we're going to like 5 million tons. It's enormous. The increase. It's going to be almost as big. Not quite, but close to as big as the steel market alone. And it'll be probably 2.5 or 3 times the value of the steel market consumption for our product. And, I know lithium's not so much in the steel market, but graphite definitely, it's the base load.
Yeah, no, it's a huge shift in the way we do things. I think, Goldman Sachs put a good report out recently, I think yesterday, sort of comparing lithium to the new oil. It's just a way of changing. It's not necessarily, as Robin said, a new super cycle. It's just the way of governments and economies changing how they use things, and how we move from the combustion engine to the electric vehicle. It's just a change of use of materials and how this change is going forward.
And I mean, I always look at the macro. I mean, look at our company went under a transformative change. I mean, we had a very significant investor. So Sir Mick Davis, Blue Resources, came in and fully funded us. And that whole fund that Sir Mick has put together is really based on the next, what he believes is the next super cycle and commodity super cycle, and that's battery materials. What he did at Xstrata and grew that company was he was out there as China was urbanizing, et cetera. He was acquiring coal deposits and what he grew Xstrata into. And now he's trying to do the exact same thing with his new fund, but it's all to do with the decarbonization of the world and the critical materials that are going towards that. And that's why you see, that particular fund investing in everything to do with batteries and clean energy. So, I just look at that as to who's backing us, for example, but out there, who can investors look at to say, okay, these are massive companies that were built by, very smart people, and now they're trying to do it again, but they're doing it with battery materials. And there's a reason for that. And I think the whole world, whether it goes to the extreme that we're all seeing and how COP, has described this, but the world is changing to a decarbonized planet. I think we all have to. I don't think there's any debate about what we need to do as human beings here. It's just a manner of how to do it and which way we do it and how fast we can do it with the commodities that we do have. So electrification of vehicles is the next thing that people are going to be seeing. And I think right now you look at the plans that are happening, it's a massive demand surge for these commodities that we're all talking about.
Okay. It was very interesting. And of course, you're all here representing listed companies and an investment proposition as well for shareholders. And I wonder if we can just kind of finish up by getting a general update from all of you across your current activities and your projects, where you are and what the roadmap is looking like. And also, as we sort of mentioned before, about all the players that are out there in this pond, these fish that are in this big pond, and it's almost about trying to separate the wheat from the chaff, or the serious players from perhaps the jokers. I think it is something that investors should take quite seriously and look into companies when they're considering investing in specifically into battery metal spaces. So I wonder, let's go in order of advancement. So Charles, should we start with the early stage first of all? Where are you at right now, and what's the roadmap, and why should people take you seriously?
Yeah, well, we are the early stage. We're quite unique. We've got three types of assets in the US, in Arizona and Nevada, which are fantastic places to develop lithium and any mining projects. We've got pegmatite assets in Arizona, sedimentary assets in Arizona, and then brine assets in Nevada. We've got a resource in our sedimentary assets in Arizona, and we're drilling now. We should be finishing that shortly, and we've got another drill program starting soon. We've got lots going on. I'm not sure we have enough time to go into that in detail, but yesterday we had a really good announcement. We just announced that we've signed a royalty agreement with Lithium Royalty Company in the US. So we've raised $10 million through that, which enables us to get our sedimentary projects to an early stage technical study, which is fantastic for us as a company. It means we're funded to do that. We don't need to come to the market to get a raise for that. And also, a portion of that is going to be a placement. So the funds for the royalty will be towards sedimentary projects. The placement funds we can use for either our brines or pegmatites. And there's some really good geophysics recently which showed us that our pegmatites go deeper than we think, or than we can see so the geophysics. So we'll do a drill program next year to investigate that. And that for us is very exciting, because if we develop or identify a deep pegmatite there, then that can be brought to market much more quickly than the sedimentary claims. As I mentioned earlier, there's spodumene conversion facilities popping up in the US. It would just be a case of making a concentrator and shipping it to there. So that for us would be really, really interesting. We'll be doing that next year. So there's so much going on in Bradda. And then there's the brines as well in Nevada, which I haven't even mentioned. So we've had a fantastic IPO back in July this year, raised over £6 million. And now we just raised another $10 million. So we're very well funded and lots to go, lots of news flow coming next year from Bradda.
Okay, and as well as the obviously the exploration, are you looking a lot further down the line for actually getting your product to market, or have you got some people looking into that right now?
Yeah, well, we're doing metallurgical testing as we speak, and that's the key part. The key part of the funding we've got now enables us to progress that, do more studies, and then develop an early stage technical study, which will be the first stage in us developing a real project there. So that's very exciting.
Okay. And you're London listed. What's your ticker?
We are BHL and London listed. We're actually also in the process of listing on the OTC. So we'll be listing the OTC before the end of the year as well, and it'll be the same ticker.
Okay. And do you know what your market cap is today?
We actually had a very good day. We're up about we're up 15% yesterday and about 5%, 10% today. So I think we're up at around £25 million, I think, off the top of my head. But I'd have to check. We've had some good results. Our royalty announcement only came out yesterday, so we've had some very good market response from that.
Okay, excellent. Okay, moving on then. Robin, whereabouts are you? What's been happening in Giyani, and what's the roadmap looking like there?
Yeah, so thanks, Mark. So we've had a lot of success this year on all sides of our business, but in particular on the drill bit. So we announced a significant resource, our maiden reserve and significant resource upgrade. We're expecting another one of those in the not too distant future here, a very significant upgrade. That is somewhat complicating the feasibility study because the project is probably going to be 2.5 times the size now. And we're making our decisions of what to do in terms of finalizing the feasibility as quickly as possible, depending on the overall scope that we choose to do on that. So we'll be looking for the feasibility to be done very, very soon. And the most important part of that, obviously, is metallurgical test work. We're basically finished on that. We are in spec on 12 of the 16 elements. As soon as that is settled, then we will sign the contract for the demonstration plant and start constructing that. So we have a lot of news coming up in the near term here, as our project very much scales up to the one area that the guys at Cormark who raised this money asked us for is, look, make this a world scale project, and we've done that this year. So yeah, very, very excited about the future. We've just completed we're in the middle of completing a financing as a board deal last week. Filed the preliminary prospectus. That final prospectus should be sometime early next week, and then we move on from that. Our market cap at that point will probably be around about $90 million Canadian.
90 million. Okay, and you'll have a lot of cash there to advance forward as well.
Yeah, we'll have about $21 million of cash.
Oh, okay, wow. And you're TSX listed. What is your ticker?
EMM.
EMM. Okay, excellent. Well, finally, Brent, the most advanced project here today. Whereabouts? Well, yeah, what's going on with you?
Yeah, so I mean, we're well past exploration. We're now near production. So we are fully funded, fully permitted, feasibility studies done many times. But our project will be targeted commissioning in July. We'll have a mine in Madagascar at 17,000 tons, which is larger than the average graphite mine. We've now done some fast tracking to expand that and accelerate our growth. So we have two things happening. That mine right now we have a study out in January that will envision it moving to 150,000 tons from 17. All that's to do with the discussions with the OEMs and right now preparing for that surge in demand for the graphite that needs to go into the batteries. At the same time, we have now established a downstream collaboration with the Tesla supply chain. So we'll be building a battery anode facility. That facility will be built within 12 months of us deciding where that's going to be placed. And right now, those discussions are with the interested parties. So that will give us the ability, and we just press released this yesterday, to actually produce coated spherical purified graphite. That is the final product that the OEMs want to buy. It's extremely technical in order to produce that. But as we explained in our press release, our partners are the ones that actually already produce that material for the Tesla supply chain, including Toyota, Honda, Nissan. So that expertise is being built into our plant. That plant will be given to us as a turnkey operation. And that's what we're focusing on right now, is just in order to move forward and where are we placing this. We are fully funded. We don't need any more money. So this is us just getting into production next year. And on top of that, we have two great offtake partners, ThyssenKrupp, as well as the largest procurer for Japan right now for that material that go into the car companies. And right now they represent roughly a 35% market share of all the material that's supplied to Japanese car companies. That's our partner. So we have that expertise, and right now it's just us executing. And that's where our head is right now. And updates will be coming out probably twice a month, all the way up until we open up in July.
Okay, excellent. And what are some of the fundamentals with your company? What's the market cap and the ticker?
About 330 million, and our ticker is NEXT, NEXT on the TSX. So we're the only graphite company on the TSX. Everybody else will be venture listed, but we're TSX listed. So.
Right. Okay. Well, perhaps a bit of an idea there, going from early stage exploration. What was it? 25 million pounds. 25 million pounds. Yeah. Up the supply maybe gives people maybe an idea of the value proposition going forward. But thank you, all three of you, for your time today. It's given me a lot. It's opened my eyes a lot. Are there any final points any of you want to make on what's going on in your companies, or where you think the future's going with these commodities?
No, I think it would be interesting to do another one of these again in a few months' time. I think they're incredibly useful for investors to be able to do that, sorting the wheat from the chaff, when they can hear the principles of the companies talk. Cogently about the differences in the market, what's happening, where their projects fit. I also find it very useful to hear the views of the other CEOs.
Yeah. And I would agree. I think the next time we have this chat, maybe investors would like to hear about what happens with all of our materials when we move into the next stage of technical advancement. What happens with solid state batteries? And a lot of questions around the battery days that Tesla and Volkswagen had, where they said, okay, this is what these chemistries are going to look like. Tesla was inaccurate in some of the things. I mean, what does silicon look like in the battery? How does it mix with graphite? How does it mix with the other cathodes? And all these technical advances that people will be reading about, how does it impact these materials right now that we're discussing that go into the current chemistries? And the good news with all of us, I believe, is every single one of our commodities will still be in these batteries in very large quantities.
Excellent.
Yeah.
Okay. Well, thank you all very much. It's Robin Birchall from Giyani Metals, Charles Fitzroy from Braddahead Lithium, and Brent Nicolation from Next Source Materials. Thank you all very much for your time. It's been enlightening, and I'd hope to do this again with you in the not too distant future.
Thank you, Mark. Appreciate it.
Thanks, Mark.
Thank you, Robin. Thanks, Charles.
Thanks, guys.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stockboxmedia.com. Thank you for watching.